The Australian housing market showed resilience in March, marking the 14th consecutive month of growth with a 0.6% increase in national home values. This growth pushed the National Home Value Index 1.6% higher in the first quarter, translating to about $12,000. Since the downturn between April 2022 and January 2023, the index has risen by 10.2%, adding approximately $72,000 to the median home value. Although the quarterly growth rate accelerated from 1.4% in Q4 last year to 1.6% in Q1 this year, it remains below the 3.3% growth seen in mid-2021. Factors such as rate hikes, rising living costs, and worsening affordability have contributed to softer conditions since mid-last year. However, a housing undersupply relative to demand continues to support rising home values. The housing market's monthly movements varied across capital cities. Perth led with a 1.9% monthly growth, followed by Adelaide and Brisbane at 1.4% and 1.1%, respectively. Melbourne was the only city to record a negative quarterly movement, down 0.2%. Growth has shifted from the upper to the lower quartile in most capital city markets. Lower quartile home values rose by 3.1% in Q1, outpacing the 0.7% rise in the upper quartile. This trend reflects increased demand for more affordable housing options. Regional housing markets also saw diverse growth patterns. Regional Victoria experienced the softest growth, with values down 0.3% in Q1. Despite higher debt costs and reduced sentiment, housing demand remains strong, with sales estimated to be 9.5% higher than last year. Brisbane continued its solid growth, with values rising 1.1% in March and 3% over the past 3 months. The middle and lower quartiles of the unit market recorded the fastest rates of capital gain, increasing by 5.2% and 4.4%, respectively, in Q1. Despite high interest rates and living costs, housing markets are performing better than expected. Values and rents are rising across capitals and regional markets, although with significant diversity. The outlook remains positive, especially with expectations of falling interest rates later this year. However, challenges persist. Housing affordability is deteriorating due to rising home values and mortgage costs outpacing income growth. Additionally, economic conditions are expected to ease, potentially leading to lower wages growth. The housing supply remains insufficient, with dwelling approvals below targets set by the federal government's 1.2 million new homes initiative. Despite record population growth, housing completion rates are lagging, indicating continued undersupply. As we progress through the second quarter, the property market will remain dynamic, influenced by evolving economic conditions, interest rates, and supply-demand dynamics. The information presented in this video is for general informational purposes only and should not be considered as professional advice. Any reliance you place on the information provided is strictly at your own risk.